Good morning. Hey, welcome to Monday, Christmas week. Hey, we'll see what's happening on Wall Street here in just a moment when Dave joins us. Before we do that, though, let's not forget that in the world we live, there's a lot of things that you and I cannot control, but we can control how much risk we have in our portfolio. You need to know what that risk is and how much it is. Give us a call at 863-382-0037.
Damn Lady Gaga there, and a bad romance. It's 8:41 now. It's 19 before 9, and Grandma may not have gotten run over by a reindeer, but last week Santa got run over by a bear. Well, another losing day Friday on Wall Street. Let's see if there's any chance of turning it around with a little help from Phillip Statler from Statler Financial Services in downtown Sebring. Good morning, sir. I trust you had a good weekend.
Yes, sir, I did. It's glad to be here on this Monday of Christmas week. All the kids are home, so we're excited about that and preparing for a great holiday season with family.
Absolutely. I'm looking forward to a peaceful Christmas weekend myself. And boy, oh boy, Friday was another fun day. The Dow ended up falling like a rock for another day, down 282 points. The Standard & Poor's was down a full percent again, 43.5, and NASDAQ was down almost a full percent, 105 points down. When are we going to readjust to this new world of skyrocketing interest rates? It doesn't seem to be abating all that terribly much either.
No, it's definitely not. We're starting to see more and more folks coming out with not good expectations for 2023. I saw an article on CNBC. Millionaire investors haven't been this bearish since 2008.
Oh, poop. And if anybody that doesn't remember 2008, well, just consider yourself blessed. Yeah, we had a whole bunch of reports and guidance out of companies last week that didn't give us any really optimistic feelings. The big specialty apparel retailer Express, they disappointed folks with their report. VF Corp, they own Timberland, North Face, Dickies, and the rest, they said their results are going to be kind of El Stinko. And then we got the retail sales at the end of the week, and it was a big disappointment as well. And now this morning I get United Airlines talking in an interview, just the CEO. This isn't anything in an official report, but he says he's seeing pre-recessionary trends in the travel industry. We were all optimistic as Delta kicked butt last week. Well, a fellow named Scott Kirby, who's the CEO of United, says he's looking at his out-month bookings, and they're looking pretty soft. So I can't think of a sector that really is in good humor right now.
No, I can't either. I just saw this come across my bulletin board here. Producer price index falls for the month in Canada. So they're battling the same issues we are here.
Man, ain't it fun to be trying to watch things during this time? I'm just anecdotal and nothing more, but Super Saturday is supposed to be the second biggest retail day right after Black Friday this past Saturday. And honest to gosh, the stores didn't look all that crowded to me.
No, I had to pump in and out of Walmart one time this week. I don't do that very often, folks. Let's just let you know. It wasn't near what I thought it would be.
Well, it was rather quiet. I ended up doing my quick grocery run on Sunday morning, and yeah, I was running a little earlier than usual, but still, it was just run through there, pick up what I needed, and leave. And I was saying, wait a minute, this midsummer or something? It almost felt like off-season on Sunday morning, and I'm hoping that's not an indicator of the other stores, but it was not pleasant so far. Other stuff, and now you're finding crud on the financial side. You're saying you think that the auto loan bubble that you and I talked about almost 2 years ago might be coming to fruition, huh?
Yeah, it really is. I found an interesting article. Musk actually is the one that's really the leading person speaking through this interview. He's really anticipating that auto loans could very well be the source of the biggest financial crisis we've ever seen. The last 2 years, everybody's paid a premium for vehicles. And if you had to have one, you didn't have a choice. You had to go buy one, right? If you needed one, you had to go pay more than what they were worth to get one.
Mm-hmm.
And so now what's happening is all these folks who really couldn't afford it had to have it. They bought it. And so now automobile prices have gone down, they say 30 to 40% from what they were the last 2 years. And so folks are underwater with their auto loans. And what the banks are seeing right now, or what this one analyst is seeing, is that people in the subprime lending, remember that's what really happened in 2008 when the real estate market, the subprime auto market, you're seeing banks actually loaning a second loan to people to buy another vehicle. And what the banks are thinking is that they'll keep that loan in good standing and they'll let the competitor's loan default and repay that car. Isn't that interesting that they're willing to take that risk, right? Because they think their competitors are going to get hurt.
The local bank will get paid, and they're figuring the big national ones like Ally Financial are going to go fish.
Yeah, I guess so. I thought that was pretty interesting. But they're saying that look for the biggest repossession season you've ever seen this next year.
Good Lord. Yeah. And it's like I said, when you told me that before we went on the air, I remember 2 or 3 years ago, somebody had come out with a thing that the next big bubble is going to be auto loans. And looking at the market changes, step number one, I just changed cars this weekend, and my interest rate on a new loan, even with what I'm proud to say is pretty primo credit rating at the moment, my new loan was like 2% higher than I was paying on my previous loan. And obviously the price in the car was up there as well. I mean, there's a bubble coming, and now you take the fact that we're on a cycle downward in terms of used car values and whatnot. There's a lot of loans that are going to end up being at risk just on the cycle of car values.
Yeah, it really was. I mean, you've got Kathy Wood. She runs the ARC hedge fund. She's right in there talking about the same things. There's a guy that runs, I guess, a website. He's called the car dealership guy, and he's the one that really pointed out these red flags when it comes to what the banks are doing and loaning for new cars.
That's fascinating. That side effect that you mentioned about taking out the local loan and shafting over the national company, that's a syndrome I never even considered as being a possibility. One way or the other, though, on a macro basis, it's a bubble that I think if it happens, you and I will be able to sit back and say, we predicted it 3 years ago, right?
That's right, exactly. So, the other thing I'm looking at is I've been putting off because I'm not paying what I see the prices are. So I'm thinking, okay, the repos come in, maybe we'll continue to see prices of cars fall and open up a market for us folks that have been waiting patiently.
I suspect that wouldn't be bad financial strategy. If one can tell, because we're talking about news items, Monday is always a relatively slow time. Monday of Christmas week is even slower. We do have some stuff coming out later on this week that can move the markets a little bit. We're due for a housing market index report out of the National Association of Home Builders this morning at 10. Based on the other sectors, we could really use some good news, and I'm not really expecting it. Are you?
No, I'm really not, though it's expected to jump by one from 33 to 34. That'll wait to see that. Tuesday, we have, again, housing stuff. We got building permits and housing starts come out at 8:30 on Tuesday. Wednesday, we don't have anything really first thing in the morning. We do have consumer confidence and existing home sales comes out at 10 o'clock on Wednesday. I'm going to say the big day this week is going to be Thursday. Always we have jobs, but the big thing on Thursday is we're going to get the final reading of the GDP.
And so that's always a big mover.
Yep, that's going to be definitely a big mover. Friday, it's going to be interesting. We are seeing some numbers. We got the PCE price index coming in. I'm trying to say there's anything else.
For everybody's benefit, that's the inflation measure that the Federal Reserve watches. So that might even be bigger than the GDP.
Yeah. So that would be the other thing that's coming in. And I don't know, the week after Christmas, there's not much coming that week.
Well, it'll be interesting enough to watch the results on Friday, because I'm going to assume, isn't Friday a short day on Wall Street?
I haven't looked. I would think so. I mean, I know Monday the markets are closed for Christmas holiday. On my little cheat sheet, it doesn't tell me they're closing early, but I would think they are.
even if they don't close, folks are going to be heading to the door and
Exactly.
looking for the free eggnog by about noon on Friday. So even if they're open technically, there might be 10 people on the floor by 3 p.m., I'd guess.
Yeah, exactly.
Pretty close. So, well, we're looking at a market that was down again on Friday. I don't even want to look at how much we lost last week, as it was greasy to say the least. 45 minutes before we open a new week this morning, Philip, what are we looking at on the markets?
So right now we have, it's really flat as you can get. We got the Dow down $13. You got the S&P 500 down less than $1. And you've got the NASDAQ 100 actually up $9. So kind of a mixed bag to start today. On the commodity side, we've got silver trying to move up a little bit. It's up 0.5%. Gold is up less than 0.1%, still over 1,800 though, at 1,801. Crude oil has made a big jump this morning, up almost 1.5% to $75.55. Dave, I got to tell you, this weekend, driving over to Tampa to pick up the kids from the airport, I saw gas price. I actually paid $2.89 a gallon at one of the gas stations.
Holy crud!
Yeah.
I saw a few 299s and 298s over the weekend for cash prices, but that's amazing. The overseas markets, Asian Rim kind of looked at us from the week and said, nah, get me out of here. Everybody was off some of the indexes as much by almost 2%. Europe, on the other hand, is seeing our kind of circumspect-looking futures this morning and saying maybe there's hope. They're up fractionally halfway through their day. Philip, I know everybody that looks at their retirement funds and then looks at how close they are to retirement, looks at markets going up and down the way they've been going lately and goes, huh? That takes a plan to avoid all of that causing ulcers. How do I find you to get that plan?
Then give us a call at 863-382-0037 to schedule their core retirement design, where we'll help them design the retirement they always dreamed of. And then join us this weekend for the Statler Financial Radio Show. I know it'll be Christmas time, but hey, listen, in between Christmas carols, you can check us out. 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
Give yourself a Christmas present. Get smart, right?
That's right, exactly.
Got you. I'll see you tomorrow morning, Philip. Thank you so much.
All right, take care.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I know it's Christmas week. I want to thank you for joining us. Hey, we'll be back here tomorrow morning, same time, same place. Until then, have a great day.